I want to talk about why I think CRT is so overlooked, right? And like why it's the truth of the markets. Now, this is an example of a trade that I actually took this trade live, and I have the trade breakdown on my YouTube channel if you wanted to actually go and see it. But that's not what this is about. This is more like explaining why CRT, right? So let's think in terms of just ICT concepts that 99% of retail traders are trading right now. So like if you're looking at this from an ICT perspective, let's not even think of it as a 4-hour chart. Let's say that this is a fucking 1 minute chart, right? Well, we see we have a liquidity sweep, right? These are terms that ICT traders use, right? So we have a liquidity sweep, we have a break of structure, right? A market structure shift, as they would call this, right? Market structure shift, and we're now attacking these lows, right? Order flow is bearish. We come down here, tap this low out. You could consider this equal lows, right? So we've got these equal lows right here. You know, a lot of liquidity. And where we are now in price, let's say, what's another ICT thing people use? Discount premium, right? You measure out the price leg from the high to the low. Bam, we trade up right into a discount, right? And we take out some more liquidity. Look, another liquidity sweep, right? And now we're showing displacement, right? We got a bearish FVG created. We've created an inverse fair value gap. We broke through a bullish one. So if you were just trading this like a generic ass ICT trader and you trade fair value gaps, you might be looking at this and saying, okay, well, I want to go short inside this FVG. Bam, right? Stop loss above the high, right? And then you're going to target these equal lows. And that's exactly what happens, right? You get tapped into the trade, boom, fair value gap, and we're heading, oh, look at that. We attack the low, right? Imagine this was a 1 minute chart. This is what I'm trying to get at here. This is how you would trade a 1 minute chart. Now imagine for a moment that you could zoom into that to get a clearer entry, right? And that's where CRT comes into play, right? This is a 9 a.m. candle. Okay, so let's just look at this now in terms of the lens of CRT, right? You have a range candle, right? You mark the opening price of the candle you're trading, which would be 9 a.m., right? And then you go down to a lower time frame. And what happens, right? We'll go to the 5 minute, right? So imagine you took the entry as a normal ICT trader trading a 4 hour, like a 1 minute chart, right? Oh, what is this? What is this happening? 9 a.m.'s open right here, right? You have the opening price. Trades up, turtle soup, rejection. Look at this. There's your turtle soup. There's your Model 1. That's all CRT is this right here. I don't understand why people think it's any different than this. You have a bearish 15-minute Model 1, right? This is where the order blocks come into play. All right, or you could enter on a fair value gap. But again, all of this open, high, low, close is happening right here. This entry that you took on a 1 minute chart, stop loss above here, target those lows, was just this. It's a CRT high. Turtle Soup, Model 1. That's your trade. Do you get what I'm trying to say here? Is whatever you trade, CRT is just zooming in on the candle. Really. That's all it fucking is. If you look at this higher time frame and you think, okay, well, I want to go short in that FVG because I think it's going to go lower, then you just wait. You wait, 9 a.m., okay, it's lining up so that there's an FVG right here. And then you just zoom down in, wait for an open, high, low, close. Enter on the FVG like you would on a 1 minute. If this was a 1 minute chart, it'd be like same shit. Like ICT traders. Oh, random market structure shift into discount, displacement. Take your short right here. Stop loss above the high. But now imagine this is a 4-hour chart. Imagine this is a 4-hour chart and we could just zoom in. All right, imagine this is a 4-hour. Right? And we're only looking at 1 minute, but imagine this was a 4-hour. And then here's your CRT candle. You get an open, high, into a key level. And if you were to zoom in to this wick, it would be the exact same thing as zooming into this wick right here. It's the same thing. Do you get what I'm saying? This is CRT. Discount. Just imagine. Oh, look, we have these equal lows right here. It's the same situation. Equal lows. We have an FVG. We get displacement. What do I want to do? I want to enter on that, right? I want to go short in this FVG. And I want to place my stop loss up here. And I want to target these equal lows. But just imagine you see this through the lens of CRT. You can zoom in on that candle right here. Just like on the 4-hour time frame. And then you would see this opening price. I can't go down into the seconds chart, but that's all CRT is. So everybody thinking, oh, it's a scam. Oh, it's just zooming in to see the anatomy of a higher time frame candle. That's all it is. Don't overcomplicate it.